I can only confirm that it has captured the imagination, but in fact it's even more. The imagination has been translated into the willingness of the industry to transform correspondent banking with the help of GPI. Why GPI and why that imagination? Because first of all, there was a changing need from the end clients, being it retail clients, being it corporate clients, but also the banks took that approach because Swift GPI is built on the existing rails with value-added new technologies. And this makes it easier with an overseeable investment to perform the requested actions by the industry. Correspondent banking, cross-border payments sits in our DNA. And we want to have the best client experience across all the client segments that we serve, being it retail, corporate or FIs. We want to have the best experience in terms of correspondent banking and cross-border payments. We are a strong supporter of GPI, especially because it is not compromising the network. The network and reach is the most important asset that we have, and we see GPI there as the top driver of the industry in terms of the future. First of all, GPI will develop itself as the new normal, as the new standard in cross-border payment or correspondent banking. And it's not only about the technology aspect, it's even more around the standards that we set. It's about the market practices. Because the biggest asset that Swift already created years ago was really to have a common standard, a common market practice across the globe, how to treat international payments. Now with GPI, we bring the transparency angle, we bring everything into that aspect to create a better experience. And of course, we will see it on the basis of the V1 aspect of GPI that has been released this year, some new technological advancement when it comes down to the version 2 and the version 3 in the future. From a de-risking perspective, it has definitely an impact. The first point I want to raise, the number of correspondent banking providers in the industry is shrinking and will even shrink further. Let me explain why. It is due to the fact that banks have to decide either I'm doing correspondent banking or I'm not doing correspondent banking. The time of treating that kind of piece as a hobby is over because it's too dangerous. You have to be very good in all the respective disciplines, and not only technology and not only operations, but also risk management, anti-financial crime. You have to have all these topics well under control to continue to be a sustainable correspondent banking provider. The second point is what we see in the industry is the reduction of SWIFT RMAs. So the bilateral key exchange between SWIFT participants is also reducing. There we have to work as an industry, but not only as an industry, it's together with the regulators to find solutions to have a sustainable future, because the biggest asset that I mentioned earlier on is the network. We don't have to compromise the network, so there's the work to do in the future. I think there is a proverb that says there is life in the old dog yet, and I think that it's very valid for correspondent banking. There is on the horizon no viable alternative to correspondent banking right now in the next couple of years. So I do see correspondent banking has still a future, but we have to change our mindset, because we don't have to fall into the same trap as in the past, that we built it once and it never changed. So we have to be ready for a much more agile future to give correspondent banking a much more better future, let's say above the horizon of 5 years.